Hello and welcome everyone to the week ahead commodity report for the 1st to the 5th of July, presented by myself, Phil Carr, at the Gold and Silver Club. So firstly, what do you need to know as we go into next week? Well, we have the G20, which is taking place over the course of this weekend. We also have the OPEC meeting at the start of next week as well. So gold prices, they have held steady on Friday ahead of the G20, with gold now on track for its best month in 3 years, up 8% in June off the back of expectations the US Federal Reserve would ease monetary policy and cut interest rates. Gold prices, in fact, are up 9.1% in the first quarter, the biggest percentage gain since the first quarter of 2016. Meanwhile, oil prices, they fell on Friday but posted the second straight week of gains ahead of trade talks between the US and Chinese president this weekend, and also on expectations of production cuts from OPEC on Monday. Brent crude oil has posted a gain of more than 20% in the first half of 2019, whilst WTI crude oil has gained more than 20%. Whilst hedge funds and money managers, they have increased their bullish positions in gold in the latest week, speculators have cut their bullish positions in crude oil. So with that, let's move over to the charts and we'll talk you through the levels that we're looking at as we head into next week. First of all, moving over to gold, we covered this in detail on last week's report and also on gold asset of the day. So essentially what we saw at the beginning of last week was that breakout to 6-year highs, tapping $1,438 per ounce. Now on asset of the day, the midweek report, we had suggested that ahead of the G20, watch out for profit taking. Also bear in mind that we are at the end of the first quarter and also the end of the month. So it's very likely that you will see some degree of profit taking ahead of the G20 at the weekend, and just that normal locking in of profits that you see at the end of the quarter as well. We've certainly seen that. So we've seen a rollover back towards the 1400 level. We also suggested that at the 1400 zone, look for evidence of buyers to come back in. That could present a good opportunity. In fact, I've had a lot of messages from those who actually bought back in around this 1400 zone and took advantage of the breakout back towards $1,424 per ounce over the course of this week. So well done to those of you who did capitalize on that pullback and buy opportunity over the course of this week with gold. Where we are at right now, gold is sitting at $1,409 as we go into next week. And you can see here, certainly we've been within a range that we discussed earlier on in the week as well, which is between that 1400 level up towards that 1430 to 1440 zone. So now what we want to look out for, of course, is what happens with the G20 over the course of the weekend. Hedge funds and money managers, they have again increased their overall net long positions as we move into the month of July. Normally that is a supportive month for the metals, not only gold but also silver and platinum too. In fact, let me just talk you through platinum. We mentioned this in detail on last week's report and the week before. We had capitalized on a 300-point breakout on platinum last week, and we had suggested that below $800 per ounce, you definitely wanted to look at that as a buy zone. Last week, the previous week, we had broken down to $792. That gave us our entry, and we took advantage of that subsequent breakout. Now, platinum has had a sizable move here on Friday. In fact, if I show you the weekly chart, if you look at the breakout, it was over a 250-point move to the upside. We've been consolidating for about 4 or 5 weeks here. Platinum needs to catch up to the price action of gold and silver lately. Gold breaking out to 6-year highs. The gold to platinum ratio reached the highest level in 20 years. The gold to platinum ratio is now starting to roll over, suggesting that platinum needs to catch up to the breakout that we've seen with gold. Also, from a seasonal point of view, platinum typically performs very well over the month of July and August, and normally it catches a bid in the last week of June, which is exactly what we've seen in the latest week. And in fact, we've seen that breakout now on Friday, breaking above at the weekly highs. The last time we saw that was going back to the 15th of February, where we finally broke above a lot of this consolidation. Then platinum broke out to $880, which would be a $40 move from where we are at the moment, or a 400-point move. It then pulled back as we got into March. We then subsequently saw a breakout all the way up to $920 per ounce, which if we were to see that level retested again, which is around the $920 per ounce level, if we see that tested over the course of the following weeks here, that would represent over an 800-point move from where the price is right now. I would absolutely have platinum on the radar now that we have broken above those weekly highs. We've been discussing this for a while now. Again, I've had a lot of comments and messages from those of you who follow our reports and you have caught this breakout. So well done to those of you who have capitalized on that move. Also, hedge funds and money managers, they have in the latest week, they've switched their positions on platinum. So they've now started to buy the recent dip. We've just started to see it edge up to the upside here, which suggests you're going to see smart money come into this market as opposed to retail traders who've been looking at this purely from a technical point of view, and they have been getting caught on some of these bear traps where essentially you've seen support broken but no follow through to the downside here, and in fact quite a large move to the upside from midweek on Wednesday, where platinum found support around $807 and now has springboarded to close at $839 per ounce. So that's another one to have on your radar. And then we'll just move over to silver as well. Silver, again, we have seen an increase in overall net long positions from hedge funds and money managers in the latest week. I'm on the weekly chart at the moment, and as I discussed previously, we do have a much larger basing formation in development here. We've now broken out on the weekly, and in fact if I take you over to the monthly chart here for silver, you can see that over the month of June we have a bullish engulfing candle on the monthly, higher lows which have been forming since last year, and we are essentially starting to build up some momentum here to the upside. Silver is one of those markets, very much like platinum, that can consolidate for long periods of time and then suddenly move 3-4% in a day. Then finally moving over to oil. So oil, what we've seen here in the last week again was another push higher. In fact, we hit the levels that we discussed last week, enjoying oil asset of the day as well, which is for WTI crude oil to test $59 per barrel. In fact, just yesterday we were up over 400 points on our US oil long position. As we mentioned earlier on in the week, we had a bullish bias. We were long crude oil, and we've really capitalized on this breakout move over the last week, following on from the previous week's FOMC statement. So where we are at with oil, very similar to what we've seen with gold here. We've seen some profit taking ahead of the G20 and also ahead of the OPEC meeting as well. If you have a look at oil here, for example, on the daily chart, you will see here where we started to roll over, we pull back, and in fact if you just add one of the channels here, you can very clearly see where we've come back up for a tap of that channel. Again, this is the third time that we've hit that channel since April of 2019, so we're finding resistance at that zone. So no real big surprise here to see some profit taking at this zone ahead of the OPEC meeting on Monday. The four main scenarios are one being rollover, so OPEC agrees to keep the same level of supply cuts in the second half of 2019 and an extension of the production cut by another 6 months. Second scenario is an increase, so OPEC decides to partially or fully unwind the supply cut, which would of course be very negative for oil prices. A deeper cut, unlikely but can't be ruled out, would very likely cause a significant breakout to the upside. Fourth scenario is we will get a no deal. That's very unlikely but can't be ruled out either. OPEC in December of 2015, they failed to agree a production cut, and subsequently we did actually see the oil prices sell off quite significantly afterwards as well. So those are the main scenarios that we're looking at. A positive outcome for OPEC as we go into next week would very likely reside in a retest back towards this upper trend channel for a tap up to 59, then breaking out to $60 per barrel. A negative outcome for oil prices from OPEC would then likely reside in a rollover back towards that 57.80 handle, and then below that you've got $57 per barrel, and then we could potentially roll over more significantly if we were to see a negative outcome for oil prices. And we'll be covering that in a lot more detail with you as we go into next week on oil asset of the day. But as I mentioned, as we go into next week, we've banked 3/4 of our profits on our long position on oil here. We're holding the rest of the trade as we go into next week with the stop loss protected. Hedge funds and money managers, they have reduced their overall net long positions in oil in the latest week, but don't underestimate the power of OPEC to be a big catalyst for some really large moves here at the beginning of next week. And with that, of course, as we mentioned before, it's very important that you have an edge in the market. This is where a research-driven approach will really give you an edge, where you're taking into account what the smart money is doing, so hedge funds and money managers, versus what the retail traders are doing, which are often on the wrong side of the trade. You want to take into account market sentiment, market flow, seasonals, the cycles, and marry that up with fundamentals and technicals, then generating a trade idea. And you can see how that process will give you an edge in the market. So if you would like to join a community of successful traders and learn a research-driven approach, as a member you get access to exclusive live trading room webinars. You have real-time trade alerts as well as real-time trading research and market insights. You have access to our private members academy membership site and also access to support and one-to-one mentoring. For more information about the service, just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.